All right, let's jump right in, shall we? Welcome to this explainer, where we're taking a really structured, data-backed look at a strategy designed to target absolutely massive market gains by 2026. Now, a lot of people comfortably park their money in traditional mutual funds or ETFs, like the Nifty 50 index. And honestly, there is absolutely nothing wrong with that. It's a solid, steady approach. But what if you are hunting for bigger growth? What if you want to find the top 20 stocks that are actually going to accelerate your wealth over the next couple of years? Well, today, we are unpacking a really powerful AI-driven strategy that does exactly that.
To show you why this is absolutely worth your attention, consider this staggeringly high number, 415%. And let's be clear, we are not talking about hypothetical, pie-in-the-sky projections here. We are going to unpack an artificial intelligence strategy that, over a 5-year period, delivered a massive 415% return. It completely shatters your average market play. So, you're probably wondering, how is such an explosive return even possible? Well, it all comes down to a very specific, fairly aggressive investing philosophy.
And there's an old saying among market educators that perfectly illustrates this core concept. Feed the running horse. Think about it. If you have a universe of literally thousands of stocks, why place your bets on a horse that's sleeping, just hoping it eventually wakes up and starts trotting? Instead, you want to find the horses that are already sprinting at top speed, and put your money on them.
In the financial world, that idea of feeding the running horse actually has a technical name: momentum investing. Basically, it's the strategy of buying stocks that are already experiencing a really strong upward price trend. You aren't trying to catch a falling knife, and you definitely aren't waiting years for some turnaround story to play out. You are stepping into a stream of explosive growth that's already in motion. But of course, the big question is, out of all those thousands of companies, how do you actually identify which stocks have real, sustainable momentum?
That is exactly where the technology comes in. The secret weapon we're looking at today is a feature called AI Pro Picks, developed by the major financial platform Investing Pro. Instead of you sitting at your desk for hours, manually trying to filter through balance sheets and price charts, which, let's face it, is exhausting, this artificial intelligence does the heavy lifting for you. It analyzes massive amounts of market data to pick the top 20 momentum stocks, whether you're looking at the Indian market or exploring global markets like the US or Australia.
What's truly fascinating, though, is how this AI strategy performs when the pressure is really on. Consider a recent 1-year period where the market was actually struggling. The standard Nifty 50 index dropped by 2.7%, so traditional investors lost money. But the AI's Nifty 20 Pro Pick strategy? It actually gained 16.9% in that exact same turbulent year. By constantly scanning for momentum, the AI found the pockets of the market that were still running even when the broader index was stumbling.
And let's see how this builds over a longer time frame. Take a look at the 5-year comparison. If you just followed the standard benchmark, the Nifty 50, you would have seen a respectable 54% return over 5 years. Not bad, right? But the Nifty 20 AI strategy? That's where we see that massive 415% return we talked about at the beginning. The outperformance here is just absolutely dramatic.
Let's translate those percentages into real-world monetary impact, because honestly, that's what truly matters to us as investors. If you had invested 1 lakh rupees 5 years ago into the Nifty 50, today you'd be sitting on about 1.5 lakhs. It's a decent profit. But that exact same 1 lakh invested through the AI's momentum strategy would have blossomed into 5 lakh rupees. That is literally the difference between a minor portfolio bump and life-changing wealth creation.
So how exactly is the AI pulling this off? Well, it actually demystifies the whole process by acting with machine-like discipline. Every single month, right on the first of the month, the AI conducts a complete portfolio review. Without any human emotional bias or attachment to a specific brand, you know how we tend to fall in love with certain stocks, it just objectively evaluates the top 20 list. It adds new stocks showing high potential, and it ruthlessly removes the ones that are dragging the portfolio down.
Let's break down the logic a bit. Why does the AI add a stock in the first place? It's entirely data-driven, and the system provides clear rationales for every single pick. It might add a stock because it's reporting record profits or demonstrating explosive real growth momentum. Sometimes it spots undervalued gems that have incredibly strong market expectations attached to them. It's essentially scanning for every quantitative signal that a stock is about to sprint.
But, and this is crucial, equally important is why the AI removes a stock. The whole strategy is designed to protect your capital. It removes stocks to lock in profits, taking a stock off the table when it's up 27% or 18% and showing signs of slowing down. But it also aggressively cuts losses. If a stock drops 3% or 10% and loses its momentum, the AI doesn't hold on just hoping for a bounce back. Nope, it cuts the cord immediately and looks for a new, faster horse.
And what's really cool is that the AI isn't just a one-trick pony. Investing Pro offers different AI portfolios based on your personal risk appetite. You've got the Nifty 20 focusing on large caps, but if you want a more balanced approach, there's a mid-cap strategy boasting a 500% 5-year return, compared to the benchmark's 141%. Or, hey, you can target undervalued stocks with the Bard Value strategy, which generated a wild 550% compared to the benchmark's 55%.
But okay, if you really want to talk about mind-blowing potential, we have to look at the small-cap strategy, known as Barra Small Cap Gems. In the small-cap world, the standard index turned one lock into two locks over 5 years. The AI strategy? It turned that exact same one lock into an unbelievable 12 locks. And what's amazing here is the accessibility. You don't need huge capital to start. Some of these high-momentum small-cap stocks are priced as low as 12 rupees or 33 rupees a share. You could theoretically start investing in 20 small-cap stocks with just a few thousand rupees.
And we see this exact same outperformance when we look at specific sectors, like India's booming infrastructure space. If you bet on standard infrastructure index investing over the last 5 years, you saw a 118% return. But applying the AI momentum strategy to that exact same sector yielded a massive 465% return. It just proves that combining a growing sector with hard momentum data is an incredibly powerful combo.
All right, hold on a second. We need a reality check here. With all these massive numbers in focus, it's super easy to get caught up in the hype, right? But the absolute truth is, losses will happen. The AI will sometimes underperform the market in the short term. Some individual stocks are going to be cut at a 10% or 14% loss. That's just the reality of investing. If you don't have the patience to weather a bad month or a bad quarter, then honestly, this momentum strategy simply is not for you.
And that brings us to the most important number of all, 2026, or even 2027. This is not a get-rich-quick scheme designed to make you wealthy by next Tuesday. It is a long-term strategy. To see the kind of compounding, explosive returns we just walked through, you have to let the AI do its job, let it rebalance month after month, and hold your positions as the overall momentum builds towards the future.
Now, I know a lot of people might be skeptical, thinking, oh, this sounds like those shady Telegram groups that edit their past stock tips to look successful. But to alleviate that skepticism, you should know this AI system has been actively running and backtested since 2019. The data is entirely transparent and verifiable. You can literally go back to a specific day in 2020 or 2022 and verify exactly what the AI recommended and what the exact price was at that moment. It's real institutional-grade transparency.
So if you want to put this data to work for your own portfolio, Investing Pro currently makes it surprisingly accessible. According to the source material, there's a 55% flash sale currently running, and if you use specific promotional links from market educators, you can actually grab an extra 15% off. It brings the cost of this institutional AI down to roughly 250 rupees a month when billed annually. That is incredibly affordable for a tool that dictates the top 20 stocks to hold.
Well, we've certainly covered a lot of ground today, haven't we? From feeding the running horse to leveraging AI for massive returns. But before we wrap up this explainer, I want to leave you with a provocative question directly from our source material. As you do your own fundamental analysis, a vital metric you'll constantly encounter is the PE ratio. So, what exactly is a PE ratio? Think about it, drop your best detailed answer in the comments below, and the best answer actually wins a physical book on candlestick patterns. Keep learning, stay focused, and I'll see you next time as we continue to explain the forces shaping your world.